Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 3rd, 2025, and we're diving into Ready Capital's fourth quarter 2024 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Ready Capital, a multi-strategy real estate finance company, has just released its Q4 2024 earnings. There's a lot to unpack, from their financial performance to strategic initiatives.
Revenue and profitability overview. Let's start with the financials. Ready Capital reported a net loss of $314.8 million for the quarter. However, they posted a distributable earnings per share of $0.23. John, what does this tell us about their profitability?
Despite the significant net loss, the distributable EPS of 23 cents indicates that Ready Capital's core operations are generating positive cash flow. The GAAP loss per share of 18 cents reflects the challenges they faced, particularly in their multifamily lending segment, but the distributable earnings show resilience in their core business.
Strategic initiatives and market position. Ready Capital has been active on the strategic front. They originated $436 million in LMM commercial real estate and $348 million in small business loans. They've also entered a merger agreement with United Development Funding 4. How do these moves position them in the market?
These initiatives are crucial for Ready Capital's growth strategy. The strong origination numbers, especially in the small business lending segment, highlight their focus on expanding their loan portfolio. The merger with United Development Funding 4 is expected to enhance their capital solutions for residential real estate developers, potentially boosting their market presence.
Dividend adjustments and share repurchase. Ready Capital declared a quarterly dividend of $2.5 per share and repurchased 5.8 million shares. They've also announced a new $150 million stock repurchase program. What does this signal to investors?
The dividend adjustment aligns with their cash earnings, indicating a cautious approach to capital management. The share repurchase reflects confidence in their long-term value, aiming to enhance shareholder returns. The new repurchase program further underscores their commitment to returning capital to shareholders while preserving liquidity for strategic investments.
CEO insights and future outlook. Thomas Capasse, Ready Capital's CEO, mentioned decisive actions to stabilize their balance sheet and a path to recovery in net interest margin. John, how do you interpret these statements?
Capasse's comments highlight a strategic pivot towards strengthening their financial foundation. By reserving for non-performing loans and adjusting dividends, Ready Capital aims to improve liquidity and reinvest in higher-yielding opportunities. This approach is expected to support a recovery in their net interest margin, setting the stage for future growth.
EPS forecast and analyst consensus. Analysts had forecasted an EPS of 21 cents, and Ready Capital delivered an adjusted EPS of 23 cents. How does this compare to expectations?
Ready Capital exceeded the analyst consensus by delivering an adjusted EPS of 23 cents, beating the forecast of 0.21 cents. This performance, despite the challenging environment, reflects their operational strength and effective cost management.
Key takeaways. In summary, Ready Capital navigated a challenging quarter with strategic initiatives and a focus on core operations. Their distributable EPS of 23 cents exceeded expectations, and they continue to prioritize shareholder value through dividends and share repurchases. Thank you for joining us, John.
Thank you. Ready Capital's proactive measures and strategic focus position them well for future growth. It's been a pleasure discussing their performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on Ready Capital's performance in the comments below.